No, it's fine. It's fine. All right, guys. Hey, what's going on, everyone? Sal here, enjoying his vacation. As you can see, I am happy to be back with you guys with this short video with my good friend David Lincoln, and he's got a very interesting thing to discuss today. We're talking about the VIX and how he believes that there is possible manipulation going on in the VIX. David, you're on. Tell us a little bit about. I got the VIX chart up. I also got VIX Central. I can bring that up as well if you wanted to talk about that. I guess you go ahead and tell us what's bothering you about what's going on with the VIX right now.
Okay, well, thanks, Sal. And let me say, first of all, that I miss seeing you every day. I understand that we all need a little break from time to time. But I have been following your updates, though, in the meantime. And I did tune in a couple days ago, and you had an interesting interview on. I hope everything's good with you right now.
Absolutely, absolutely. I appreciate that.
Nice. Well, yeah, a couple months ago there was a whistleblower in the VIX, and it was a trader who didn't want to be named, but he went through some attorneys to file this sort of lawsuit claiming all this stuff, and the SIBO had their usual denials. Now, I don't want people to think I'm some sort of loony, theorist. I'm not Alex Jones here talking about, gay frogs or something like that. But not that there's anything wrong with gay frogs.
Right,
but,
right. Let's not get suspended.
No, no, this is a legitimate concern that's been covered by a lot of the media. In fact, I was looking at a Financial Times article just today over the most recent expiration. Now, we're coming up on expiration Wednesday morning for the VIX and VIX futures. And it happens once a month. And just to refresh listeners, the VIX is based on a strip of SPX put prices. So they're looking at the option values of several different options in the SPX, and by putting that through a formula, they're deriving the price of the VIX. And it's an estimation of volatility 30 days out. So, and the way expiration works in the futures is on the morning of expiration, they have an opening rotation in the option. So they will go through all the options by strike, and any orders, they'll put a bid and an offer, and any orders will trade, and then there'll be a settlement price for each option, and that is where you get the price of the VIX from. So the most recent expiration, not a whole lot was going on, and if you were following the VIX, all of a sudden it ripped up like 2 points in the last half an hour, right around the time of the settlement. And
Dave, do you remember what day this was?
This was about a month ago on a Wednesday. So let me see if I can pull it up here. I apologize. I should know exactly what it was. Let's see, but
it could. I'm seeing a really interesting spike. There maybe was that April 24th possibly. That wasn't really interesting. But go ahead.
Let me
get that.
Let me pull up the VIX right now, and I can probably do it from the chart here. So let's see. But so they things ripped up at the last moment before expiration, and it was 4 weeks ago Wednesday. So what would that be? Let's see. So Wednesday would be the 16th. So nice second. So it would be the 18th. Wednesday the 18th.
Okay.
And it ripped up in the half an hour before, and the explanation from the SIBO was that there was an order imbalance to buy 114,000 contracts in the SPX at that moment. Now, I don't think anybody would believe that it's just a random occurrence that some guys picked this moment to buy 114,000 contracts, because that's a lot of contracts even for the SPX. And the biggest part of that order was some options 50% out of the money, and I haven't looked through the open interest to find the exact options, but it's somewhere around the 1,400 strike in the puts. And people thought that was suspicious because, here's how a manipulation would work if you were going to do it. You would get long the front month futures or VIX options on the futures, and then you would buy these puts, and the price you would pay on the puts would be smaller than the amount that the actual VIX moved. And so maybe you would spend $200,000 to buy some puts, and you would make $2 million on the move in the VIX. And so there's no way for us from the outside to check the order flow and see who the customer is exactly, whether he's opening or closing, and what specifically happened, because the SIBO is very veiled about it. But there's two questions to ask. One, is this manipulation? And two, was it illegal? And so I've gathered two guys to come on tomorrow onto my show at David Lincoln. One, Vance Harwood, who's one of the most renowned experts on the VIX. He has sixfiguresinvesting.com, where he explains everything about all the different VIX ETPs and does extensive back testing. And another is Andrew G., who runs Option Pit and is was an ex-SIBO guy like me, and he trains a whole bunch of different traders. And they're going to discuss what happened. And, from my point of view, if these guys can get away with manipulating something, which is like in a pocket, if you have a very illiquid stock.
Well, I've always believed, David, that the market was rigged. I mean, especially when you're talking about these very expensive stocks, and you're dealing with people with billions of dollars worth of capital. I have no doubt that the idea that there is some kind of manipulation involved is very true. It's hard to prove, right? I mean, because as you said, we don't get the inside information, and we don't get to see all the moves, unfortunately. And when we do catch a move, they don't tell us exactly how it went down and who put it out there. But I have no doubt that there is, in fact, manipulation in our markets.
Well, you must see it a lot coming from the penny stock world, I'm sure. Right,
of course. And I'm sure that plays a part into my biases as well.
Well, in general, I have a feeling with the SPX that if you try to rig it, you can run into a brick wall, because there's so much money going through there. About 80% of the trading in the world goes through the SPX every day, notionally. And so no matter how big you are, you can run into a brick wall. And so somebody who maybe they found a little air pocket here and it worked out this one time, but things could just as easily go completely against them, I think. And it's very, like you said, it's very hard to prove. And the only way really to get more information would be to shine a light on this, so that the SIBO feels obligated to actually, provide some more information, because we all want the same thing. We want a fair playing field, and we want something that customers feel comfortable going in and investing their money in. And that's what we're really looking for, is transparency, and to kind of explain to customers and retail people the process of what's going on, so they can make their own decisions.
Absolutely. With that being said, now that we've put that out there, David, do you want to talk a little bit about where we are right now in the VIX? What do you see, at least for the short-term future? I'm on VIX Central right now. Is there anything that you see of any interest in the VIX current term structure?
Well, as you know, we had that Volpocalypse, which was February 7th, which was the biggest recorded move in history of the VIX. Now, the VIX has only been around in the 2000s, and so if you were to sort of extrapolate out to the 87 crash, that might have been like a 300% move, but that move we got was about 100% move, so it was a huge move. And ever since then, for 2 or 3 months, we went into backwardation 4 or 5, 6 times, which is very rare. We had 2 of the longest periods of backwardation in the top 10 ever within those 2 or 3 months. And so, but in the last few weeks, with the SPX recovering and the whole market recovering, as you know, things have, it's been several days in a row, up a little, up a little, up a little. Right. For a while, realized volatility, and by that I mean how much the indices were moving really per day, which was like 1-2% per day. When you have that realized volatility, the VIX can't come in because stuff is moving around actually all the time. But recently we've had smaller and smaller moves, and volatility has pretty much collapsed, really.
Wow.
So if you look at a chart of the VIX, you'll see volatility collapse. And as that's happened, the term structure has gone into contango. And if you look at it, you see that there's an upward slope to the chart. So today, we are only 2 days till expiration, and so the front month future and spot are forced to converge. So if you have spot kind of staying where it was up a little bit today, but just very small, a few cents. The front month future is forced to converge with it because we're coming on expiration. So that's why we've jumped in the last 2 days from 4% to 8% contango. And so that 8% represents a decay in value of these instruments like TVIX, VXX, UVXY.
Absolutely. And we've seen both of those products absolutely be decimated. Absolutely. Go ahead.
Yes. And that 8%, remember, is per month. So you can times that by 12 to see what percent per year these things are decaying in value if things stay where they are. Now, things aren't going to stay where they are. If you look on your VIX Central chart to that number 2 on the bottom, that is the rate of contango that we will be using after Wednesday, because it'll be those two futures, the M2 and M2 and M3 futures right now, 1450 and 1496. So contango will reduce, but still, I mean, to get this curve turned back around again, we'd have to go from 1293 up to 16 or 17 again. So there's a lot of pressure on the downside, and it would take a whole lot of down move to get this thing turned around again. So once we start rolling on this downward contango thing, there's pressure, a lot of pressure to the downside. So what that means for us as traders trading TVIX or UVXY is you just want to be real careful if you're going to get long it. My rule of thumb is not to get long it for more than 48 hours. If you got an idea that like the market's starting to turn, jump on, by all means jump on there, because it could definitely spike and make you some serious cash. But if it doesn't happen for you, you're going to have to bail within 48 hours. That's my rule of thumb.
Wow. Interesting news there, and that's a great tip for you traders out there who are watching this right now. This is not a product for you to stay in for, 2 weeks, 3 weeks, 4 weeks at a time. Because I know a lot of guys, David, who are taking huge losses right now in TVIX. They were expecting a pullback in TVIX, or pullback up higher from, mid sevens, and then it was mid sixes, and then it was high fives, and now they're just getting killed. So, well,
it was a great play. I'm sorry to interrupt you.
No, go ahead, David.
It was a great play for a couple of months.
Absolutely.
You could jump on that TVIX and you just hang out, and you know that sooner or later you're going to get that down day, and it's going to pop, and you can take your winnings. But now you got to pay for that right to get that big pop. You got to pay for it, and it decaying every day. And I same thing on my forums. I've had several guys say, look, I've owned this thing for a couple bucks, and what should I do? And my advice usually is, if you sell half, you cut your problem in half. You're not going to be thrilled if it goes back up, but you're not going to be too decimated if it goes back down.
Absolutely. Wow. With that being said, David, let people know where they can reach you out and follow you here on YouTube as well as on social media.
Sure. I'm at David Lincoln. You can look me up, David Lincoln, on YouTube, and I'm at The Famous Dave, at The Famous Dave on Twitter, and Famous Dave on StockTwits. I'm most active on StockTwits, so you can usually find me there hanging out.
There it is. All right, guys, make sure you subscribe to his channel. I'll include it in the description. Make sure you go there, subscribe it. I will include his Twitter as well. Follow him on Twitter. This is David Lincoln. This is the man who knows about volatility. I love having him on the show all the time. Appreciate you, David, for coming in.
Well, thanks so much for having me, LaSalle, and I really enjoy your tweets every day, so keep it going.
Will do. Thanks a lot.
All right, thanks, buddy.
All right, guys. Take care. Be right back.